The core catalyst. The Hormuz paradox. Global markets are navigating a fascinating push-and-pull dynamic this morning. On one hand, newly released U.S. inflation data came in softer than expected, providing a brief sigh of relief for equities and fueling hope that the Federal Reserve might ease off the tightening pedal. On the other hand, the geopolitical landscape in the Middle East has flared up dramatically. The U.S. has launched a new wave of airstrikes against Iran and reinstated a naval blockade near the Strait of Hormuz. This direct escalation has brought energy security and inflation fears right back to the center of global trade, partially offsetting the positive inflation sentiment. 2. Market breakdown by asset class. Crude oil charging higher. Energy markets are extremely volatile as the battle for control over the Strait of Hormuz intensifies. Brent crude surged to around $85.50 a barrel, keeping last session's explosive gains intact. The market is pricing in the stark reality that global oil stockpiles are significantly lower than they were earlier this year, meaning any prolonged disruption in Gulf shipping will instantly trigger severe supply shocks. Forex and bonds, a temporary breathing room. The US dollar index DXY has slipped back below the 101 mark for a second consecutive session, primarily dragged down by the cooler CPI print. The Fed debate, markets are currently split. While the soft inflation print scaled back immediate rate hike bets, Fed Chair Kevin Warsh's recent congressional testimony maintained a staunch commitment to price stability. Investors are still pricing in a roughly 50% chance of a September rate hike, keeping bond yields relatively steady. Global indexes, a technology-led rebound. Despite the looming oil shock, equities managed a relief rally on the back of the friendly inflation data. US and Europe, US futures are trading slightly higher, extending yesterday's gains. European stock futures are also pointing to a positive open as the cooler inflation narrative temporarily overshadows the geopolitical risk premium. Gold holding ground. Above $4,000, spot gold XAUUSD is exhibiting massive resilience, stabilizing around $4,029 an ounce. While it gave back some of yesterday's sharp gains due to the persistence of high core inflation and geopolitical jitters, the weaker US dollar and robust physical demand from Asia are keeping a very solid floor under the precious metal. The key psychological support to watch remains at $4,002. Let's take a look at the 4-hour chart for gold again. What kind of intraday trading opportunities can we find today? Right here we have this line. As you can see, the price is moving within this channel. The upcoming US CPI data today is going to be crucial. If the data comes in soft, just like yesterday's CPI, we could see a move toward this trend line in our beta bands. If the PPI data is favorable, we will see a push towards $4,100. A close above $4,100 will set our next target at $4,180. Now looking at Cycle Sniper, on the 1-hour chart, it's currently sitting in an indecisive zone. However, on the daily chart, there is still a strong probability of an upward move, as you can see here. So this is what we'll be waiting for on gold. If the price pulls back into the $3,980 to $3,950 range, basically this zone right here, we can look for a buy entry with a tight stop loss and target the next leg up. Throughout the day, I'll be posting other trading opportunities on my TradingView and X accounts. I also have 3 oversold stocks on my radar that I'll be sharing with you shortly. You can find the links to both my TradingView and X accounts in the description below. Thanks for watching and see you next time.